Hello guys, fairbinaryoptions.com here. As you can see, it is still Sunday 10 p.m. 26th of January, and we are preparing the next trading week. What we are looking for is we are looking at the US dollar Japanese yen. As you can see, it is the 4-hour chart, and the US dollar Japanese yen, as it happened with the equity markets in the United States and all over the world, has been going to the downside, as well as equities were moving down. Now, like the name of this recording or analysis says, we are looking at an elongated flat, and our elongated flat is this one here, from the highs and to the lows like this, and this is being normally labeled as ABC. So this should be wave A in the form of a threes, in the sense that it is coming in the form of a corrective wave. So wave A, and the B wave to the upside, and then a C wave to the downside. You might say, well, there is no way this one to be a flat or an elongated flat. Well, the thing is that an elongated flat needs to have the C wave to go more than 138.2 extension, ideally 168 extension when compared with the B wave. So you have wave A, wave B, and wave C. Now, if you judge the flat based on the retracement level for the B wave, you are seeing that the B wave retraces way more than 80%, something between 80 and 100%, and that makes this flat here, all right, it is being called a common flat, in the sense that the B wave retraces as a normal B wave, but the normal B wave, it is being overshadowed, if I may say so, by a 5 waves impulsive move to the downside. What kind of a 5 wave impulsive? Well, the first wave, but of a lower degree, is one here. The second here. The third wave to the downside. Now, it is usually, when you are looking for a third wave in a first wave impulsive move, then the third wave relates usually 61.8 when compared with the length of the first wave. So if you are measuring the length of the first wave blue, you are seeing that actually it goes almost by the pip with the 61.8, and therefore this is why we are looking here at a first wave extension for this move here. So a 5-wave structure, ABC, and a 5-wave structure. What next? Well, if you look at the move from the highs to the downside, normally after this ABC, I would say that elongated flats appear only as the entire leg of a contracting triangle or part of a leg of a contracting triangle. It doesn't really look like this is the entire leg of a contracting triangle, but most likely part of a leg of it. So what I'm really looking for is that ABC, and then we want an X wave to the upside. But our X wave to the upside, so again, but our X wave to the upside normally should not retrace more than 61.8% when compared with the previous wave, with the previous correction. Now this is the previous correction. And as you can see, the move to the upside here retraces more than 61.8%. Therefore, this is not allowable for the X wave. Why is not allowable? Whenever you are looking for an X wave, the X wave can go only in two different ways. First of all, it can go less than 61.8%, and that means this would be the corrective wave. Or if it is more than 61.8, it is mandatory to end above previous highs in our case. So there is no way the X wave should end between 61.8 and 100. So this is not the end for an X wave. Well, if it's not the end of an X wave, what it is? Definitely we are looking for an X wave into this area, 38.250, something like that. But normally it will come in the form of a flat. Basically, what does it mean? It means that A, B, C, so we're looking for an X wave to come, The X wave should be a corrective wave, as always it's a corrective wave, something like that. And it comes in the form of a lower degree of an ABC. This is Elliott wave, Elliott waves at its best, and this should be labeled wave A of a lower degree. And then what next? Then we're looking for a B wave to the downside. I would say that wave A only ends here. Okay, so A, B, C, wave A in a three-ways move, or A, B, C, X, and then a triangle here. Then this move to the downside that makes a new low. I would say it is only a B wave. You might say, why only a B wave? Because this B wave to the downside, it is channeling too L. Whenever a move channels to L and resembles impulsive activity like this one does, then it should always be a corrective wave. What to look for next? Well, this is three waves, irregular. Now we are looking for a five-way structure. Now this five-way structure normally should go and break these highs, but if it doesn't break these highs, it will be called a C failure. So we are looking for a C wave out of this degree to go to the upside. Probably market will try to force the hand of the Fed until the FOMC meeting this Wednesday, so to have an impulsive move, mandatory a five-way structure to the upside, and that would be only the end of the next wave. What I would really like to do here, and it doesn't matter when price will come, but if price will come this week, as you can see this retracement level here, so this is where I would like to buy put options. So by the time price is coming 103.87, and it will come 103.87, you might say, why not buying call options from here to here? I would like to see first that this triangle breaks to the upside, and maybe I will buy call options with end of day expiration date by the time this triangle breaks to the upside. Not here, not now. What I would like to do here is to place some, normally on a regular market I will place some pending orders here. But on the binary options, what I would really like to do is to buy put options by the time price it traces to this level 103.87. Expiration date would be end of week. So buying or looking to buy put options by the time price reaches 103.87 or 80 area with end of week expiration. If this is coming on Thursday, no problem, we'll buy them with end of week expiration date. That would be on, of course, on Friday. It doesn't matter. Whenever price is reaching this area, we'll go and buy put options. Remember, when you buy an option, either a call option or a put option, it doesn't matter how long or how much price travels. What's important is that at the expiration date, price to be lower than the striking price. This is our scenario here, and therefore this is our recommendation. Thank you very much for being here. Let the games begin. Let's see what markets are having this week. Important to note that on Wednesday, FOMC will bring immense or intense volatility to the markets. Have a great day, and see you tomorrow. Keep in mind, this is fairbinaryoptions.com, and all of these analyses and recommendations are possible due to the help of our sponsor here, Lionel.